as a best practice, we encourage people not to pick. I've invested in lots of things, and things that I thought were going to go great didn't, and things that I didn't think were going to go great did. When you look at the analysis of who wins in the venture business, there's a lot of data that says do a lot of diligence, look at a lot of deals, invest in a few, and diversify. Invest in 25 or more. It's not clear that when people pick that they do better. And so as an investment strategy, when we approve things, we sort of say, well, we want to be sure that somebody does well, whether they pick or not. We have a lot of collaboration between our investors and the entrepreneurs, and they even help find customers for them. So we call it a market network. We basically say, what's Silicon Valley do well? They have startups, they have investors, they have early adopter customers, and they have gray-haired people who've been around the block. And they're all together, and they all work as a team to help those companies succeed. And what we're trying to do in a similar way, if you've got high net worth investors who themselves have been successful helping the startups, so we create a very loose network to try to move them along. So Friday and Saturday night, we always ate together as a family. I think this was the time period before everybody seemed to be out doing sports. So my father was a lawyer on Wall Street.
Oh, wow.
And often would sort of come home late, 7 o'clock. But Friday and Saturday night, we always had dinner together. And he always, each night, gave us a problem one of his clients had. And our job was to figure out how to solve the problem the client had. And from probably age 4 on, I remember that. And so it taught me a lot about, I guess, negotiating and opinion and debate. I think sometimes maybe it frustrated some of my siblings, but it was entertaining. And when I went to my first job and I had some senior people say, does anybody have an opinion? I would start off with my opinion. I realized at age 23 that they weren't trying to include me, but my father taught me at age 4 he did, so it was interesting.
That's awesome. Do you remember any standout stories that you tried to solve back then?
I remember in 1974. I'm an engineer, so in 1974 or so, he said he had a client, which was a French software company that had developed this new technology to do drafting online on a computer screen, and that there was this thing called CAD. And the name of the company was Dassault, which is a major aircraft company, but they developed a software called CATIA. And they were licensing it to IBM, and he was asking him how to license it and such. I guess I was probably about 8 or 9 at the time. Later on, when I was at Boeing, and I'm responsible for a lot of the R&D investment, Boeing was a big CATIA user, and we invested. I was responsible for figuring out how we were going to invest about $60 or $70 million a year in extending CATIA. So it was sort of interesting that it was a novel concept in 1974, and later on in life, it was one of my responsibilities. So
that's really cool. That's very, very cool. So growing up, did you have any entrepreneurial tendencies at all? Were you the kid that was selling candy or anything, or did the entrepreneurial bug not hit you till later?
Yeah, I would say that I had a similar lemonade stand. I was also an engineer at the same time, as I say, and so I would take things apart, put them back together again. I spent all my time at Radio Shack. Lots of science fair projects. So on the entrepreneurial bent, I was maybe the CTO. But I sail a lot. So I think at age 13, a friend, Chris Generelli, and I created a boat cleaning business, and we would clean boat bottoms, and it gave us a reason to get certified to scuba dive. Cool. I think I did a little bit of lawn care, but I was more boat bottoms, and
Yeah,
I think
that sounds like more
early
fun.
early got jobs, summer jobs, and good summer jobs. So I think I've always leaned in that direction.
Yeah, that's awesome. Were you doing that in Lake Michigan as well, or?
I grew up in Rye, New York, so
Okay.
that was on Long Island Sound, which is not the diving mecca of the world. The Long Island Sound, that was also a little bit after Jaws.
Okay.
So, and Jaws was in Edgartown, so that was north of where we were. So in murky waters, scuba diving at age 13, you sort of every now and then are afraid that Jaws was going to get you, but he never did.
That's great. That's great. Very cool. So talk a little bit about how you got involved in the funding space. Did you have, you mentioned before that you were uh, put in charge of some big projects at Boeing. Was this something that you had always seen, or how did you come across
Funding?
this need? Yeah.
Yeah, so um, my my career path was aerospace engineer, McDonnell Douglas, worked on fighter aircraft, and sort of moved my way along. In '04, I left Boeing when the CTO and the CFO decided to retire, and I did a startup, bare bones startup went from $2.5 billion annual budget, investing,
Mm-hmm.
even then in technology. Did a startup in bare bones startup in '08 that we grew 5 guys in a strip mall. We sold successfully to Johnson Controls in the fall of '08 for
What, what
cash. When
what did you do? What was that business?
a company named GridLogix, and at that time we said, if we connect all this data together in building systems, we can reduce energy use and give better information about what's going on in the building. And then someone called that, after we started it, someone decided to call it Internet of Things.
Mm-hmm.
So we were one of the first, I guess, one of the early Internet of Things companies before it was a thing.
Mm-hmm.
And that is now the cornerstone of Johnson Controls product called Panoptix. We sold that in '08, October of '08. So the stock market was falling apart, and we had a product that Johnson Controls wanted. We sold for cash with a good return. And one of the reasons we sold was that we couldn't raise money in St. Louis.
Mm-hmm.
We were going to have to move the company to Silicon Valley, and Johnson Controls was giving us a nice premium, and so we sold. And I was frustrated over time. I sort of played for a little bit, having had a nice exit, played, but ultimately got back to my roots of, innovation matters.
Mm-hmm.
It's hard to get funded outside Silicon Valley, and so me and the other folks who helped start iSelect saw that as an opportunity to figure out how to bring more capital to places other than Silicon Valley, and so from there I've been investing in young companies.
Mm-hmm. And what types of companies do you focus on?
We tend to focus on agriculture and healthcare related companies, deep tech, so PhDs, masters. So on the healthcare side, technology that helps personalize healthcare and understand your health in terms of diagnostics, and also some therapeutics. And then on the ag side, genetics and inputs, and a lot of the B2B aspects of agriculture. The macro theme that we're aimed at is food is health. And so there are a bunch of people running around talking about how to create better healthcare programs. And if you really get to people close to the healthcare issue, they say diabetes and cardiovascular disease is really driven by diet, and diet is driven by food. And so we're focused in and around both on the healthcare side and the food side about how to reduce type 2 diabetes and reduce cardiovascular disease through therapeutics, diagnostics, and better food.
Oh, that's great. That's great. So what is the qualification process? Like what would someone do if they're in one of those industries and they listen to this? How do they reach, well, we'll get to how they reach out to you, but how do they how do they best present themselves to you where it would be something that you would take a further look at?
Yeah.
If
So in general, we reach out to them. We are very thesis driven, so we have areas that we focus in. For example, we're not good at direct to consumer.
Mhm.
So I think the first, whether it's us or somebody else, is a lot of venture capitalists say, look, we focus in particular areas, just really come to us if we're that area. And so I would say the first thing is don't go to a VC who says they don't invest in the area.
Mhm.
just not productive. So we like, one, they be in our thesis area, which is on our website.
Mhm.
I think it helps a lot to reach out to us through somebody that we know. I'm very active on LinkedIn, and it's very easy. And it just helps because you easily get 10 or 15 people a day trying to reach out to us.
Mhm. Mhm.
And so I think the way you get above the noise of that, because we just can't process it. I mean,
Yeah.
I get emails all the time, and I feel awful that I can't keep up with them. So we try. So I think the second sort of basic is, if you look at LinkedIn and you're connected to somebody inside the fund, it's usually a good idea to reach out to that person, and maybe that helps it along.
Mhm.
And then I think we're really sensitive to, is your product getting close to customers? Do customers care about it? So we like to hear both certainly about, hey, we've got a strong team, and this is the quality of the team, and here's the technology. But, people who are insightful about the customer, it could be a therapeutic, so it might still be years before they see a customer, but real sensitivity to the customer and what the customer challenge is. It's very helpful to hear that early in the process.
Mhm.
We generally think, we very quickly look at people and determine whether they're qualified.
Mhm.
If somebody says, I'm going to go into ag tech genomics, but I started out as an English major,
Mhm.
that really doesn't help. But then if they come in and they're qualified and they understand what's the field, at that point, one of the early things we want to understand is, do they really understand the customer, and are they sensitive to the customer and connected to the customer, and can they reflect on what the customer need is?
Mhm.
We always say that, well, here's one thing for you. What does every startup need?
I would say that they all need. I would say probably going to go back to the team. Everybody needs a good team.
Yeah, so you need a team, you need money, but we always say you need a customer.
Okay. Yep.
Customers, it's actually a pretty deep aspect of our fund. Customers, at the end of the day, customers got to buy the product.
Mm-hmm.
And it could be I'm going to build Tesla and I don't have the car for 4 years, but someone's got to buy the product.
Yeah, you have your avatar worked out.
So, you got to have a sense of who that person is and get some feedback from them. Say, look, you had a cool idea, but it's wrong in these regards. Because if you understand what the customer wants, then you're going to spend less on product development, or you're not going to develop things that the customer doesn't want. And so sensitivity or an ability to understand that customer is important early in our process.
Yeah, that makes sense. So you've mentioned a couple of times you work mainly with early stage startups. At what point would they start to think about reaching out to you? So you've mentioned that you want to have your customer in mind, and you've said if it's a physical product, maybe they don't have a physical product yet. Physical finished product for another 3-4 years. At what point is it that you would start looking at these people? Is it completely conceptual? Have they done a little bit of obviously they had to have done a little bit of research to identify who their customer is. But at what point would you say is sort of your sweet spot? Where they've done enough to be able to qualify their idea. What would they have had to have checked off before they would reach out to you?
Yeah, so we typically invest in technically what would be called a seed round or a Series A. Which typically means that the firm is on their own raised $400,000 from family members and other people close to them, people that they've got a reputation with and know them, and that they've done that type of work, and they've put some skin in the game and exhibited that they're willing to take the risk. So in terms of product, it really depends. If it's a drug, we'd like them to be mid-phase 1. So they're sort of doing the safety studies. But if they're doing software, that they've developed some aspects of the software, in all cases that they've had some conversations with customers. On the drug side, that they've talked to the FDA. On the software side, that maybe they have a few users using the product. So we just want to see the beginnings of that traction. They don't have to have revenue. They don't have to have a completed product. On software, they could be a year from completed product. But that's sort of the rough. So we tend to invest at the same time as other venture capitalists, other early stage venture capitalists.
Excellent. So you've mentioned a couple of times that this is a fund. So flip this on the other side as well. Is there opportunity for people that you want to invest in this fund and help participate in some of these startups? Do you
Yes.
take investment that side?
So this is a really shocking number. And I've checked it a dozen times. And in the United States, the overall net worth in the United States is somewhere north of $90 trillion. 60 trillion of it is in accredited investors or better. So 60 trillion to invest in startups, you really need to be accredited. There's $60 trillion of accredited wealth in the United States. The thing the United States is best at is innovation. And there are lots of reasons why we're best at it, but we're really best at innovation, on the best in the world by a large margin. So the venture capital industry in the United States is only $450 billion. That's a big number.
Wow.
But the hedge fund industry is probably $2 trillion. The ETF markets and all that, all these other markets are huge. But if you think about it, the thing that's we always talk about, what's the policy? Who's going to make the economy better? The people who make the economy better are frankly entrepreneurs and innovators who look at a problem and say, I got a better way to do it. Now, maybe they're backed by venture capital, or maybe they're backed by their friends, or maybe they're backed by their family, or maybe they're starting a new restaurant, or they're funded in a lot of different ways. But for a country that on the world stage, the greatest thing they deliver is innovation, to think that we have $60 trillion in the United States, and only $450 billion of it's allocated to new startups, that seems to me like a gap. So when we started iSelect, we sort of said we want to do two things. Thing one was be really good at agriculture and healthcare venture. Thing two was, why don't we change how people invest? And so when we thought that the reason why people didn't invest in venture capital was because of risk, what we discovered was it has a lot to do with access. So if you want to get involved in a good venture capital fund, the minimum is $20 million, and there's a waiting line. So I know billionaires that will not invest $20 million in one thing. So this is not a $20 million minimum is a pretty high bar. And so we said, well, what if we made it 50,000 and made it so that you could invest whenever, and that there was no waiting line? And so we actually have done a lot of innovation around fund structure. And then we said, if less than 1% of the country that can invest in venture capital does invest in venture capital, what will it mean to the country if we get 3 or 4 or 5%? And so we are on a mission to reach out to registered investment advisors and financial advisors and broker dealers and people, wealth managers, and all the people who help wealthy people figure out where to invest, and have conversations with them about where venture capital fits in. And we've done a lot to sort of structure our investments process so that somebody can come in at any time and make investments and get access and help get a good return, while also the positive externalities is if we fix food or fix healthcare, that I just think this is a more direct way to fix those problems.
Yeah, no, that makes perfect sense. So you said there's basically a $50 minimum buy-in to
$50,000 minimum.
50,000. Yes,
Yep.
50,000. And would they just go to a website and sign up for this, or how do they find out about it?
We typically go through wealth manager.
Okay.
And so financial advisor. So someone certainly can reach us directly and we can work through that. They also could have their wealth manager talk to us, their financial advisor, but both are available. Because of the regulatory environment, it's usually good to have a wealth manager involved to make sure that people are making the right decision. But if you go to our website, you can either talk to the little box on the bottom right-hand side and get connected, or reach out to our sales team and we can figure out a way to help you through the process.
That's great. That's great. What are they able to choose the types of investments that they participate in, or is it basically just sort of a lump fund that gets allocated toward?
They can choose. We said a few things. We said, let's make it $50,000 minimum. Let's make it so that people can choose, and let's eliminate it so there's only one K1. It's sort of odd that that's an important thing, but I've been in front of many investors and they say, how many K1s do I get and is it on time? So we design for all of those things. As a best practice, we encourage people not to pick. I've invested in lots of things, and things that I thought were going to go great didn't, and things that I didn't think were going to go great did. When you look at the analysis of who wins in the venture business, there's a lot of data that says do a lot of diligence, look at a lot of deals, invest in a few, and diversify. Invest in 25 or more. It's not clear that when people pick that they do better. And so as an investment strategy, when we approve things, we sort of say, well, we want to be sure that somebody does well, whether they pick or not. And so we encourage people on early stage to basically just invest in the next 25 opportunities we have. We have created something unique. So the other way people make a lot of money in venture capital, like Yale. So people often talk about what a high performer Yale is in venture. And when you dig into it, they say, well, it's because they invest in venture capital. It is sort of. The thing that they do is they invest early. 1 out of 10 deals might really mature to something big, but they also get follow-on rights. So when it's a mid-stage, Series C, later stage deal, they reserve the right to invest a lot more at that point with the venture funds that they invest with. And really what they do, they sort of leverage that up. It's like an option, like a warrant, and it lets them leverage up their investment once they've got some more information and certainty. So what we did is we created a function inside of our portfolio that says you can invest in the early stage, what we call our alpha portfolio. It's sort of a 1 out of 10 will really take off. And then as it moves to the later stage, you can change your allocation and invest more. So a way to think about this is you go to Silicon Valley, you invest in a bunch of deals, and Facebook and Uber show up out of your portfolio, and now it's 24 months, 36 months into it, and 24 months before going public, but it's pretty clear these things are moving quick. At that point, you can sort of make a decision and say, yeah, I invested 10,000 originally, but I'd like to invest 100,000 at this point. And so we've given that people that, I think we're one of the first people to sort of create that capability for people to change their strategy. And that's what we're trying to do. So we're trying to make it easy for people to invest, and then make it so that as the companies mature, that people can double down and triple down and increase their investment.
Yeah, I love it. I love it. This is great. I mean, it's great on both sides. Again, you talked about the shortfall of funding for the entrepreneurs, but then also exposing those entrepreneurs and those ideas to the other investors. I absolutely love it. So, Carter.
We have a lot of collaboration between our investors and
Oh,
the entrepreneurs, and they even help find customers for them. So we call that, we call it a market network. We basically say, what's Silicon Valley do well? They have startups, they have investors, they have early adopter customers, and they have gray hair people who've been around the block. And they're all together, and they all work as a team to help those companies succeed. And what we're trying to do in a similar way, if you've got high net worth investors who themselves have been successful helping the startups, so we create a very loose network to try to move them along.
Yeah, I really like that a lot. So it's I mean, it is sort of a holistic type system where you cover all the bases there, counseling and advice and funding and investments. So I really like that a lot.
Good. We want to expand the amount of people paying attention to it.
Yeah.
It's been a lot of effort to get to here.
No, that's great. So talking about paying attention, if people want to learn more, what would be the best way to reach out, whether that be for investing or I guess investing is more through wealth managers and whatnot. But if they want to get,
well, they can reach. They can go to our website, iSelectFund.com, and read about it. There are various places on there to contact us. And depending on the situation, we can figure out how to, if you want to invest, we can get you properly connected to do that, and meet all the various regulations and all that sort of stuff. So that's probably the best way to do it.
Love it. Excellent. Carter, this is fantastic. I'd love to be able to, connect with you again at some other point, and maybe we can dive into some of the projects that you're even working on. If you're allowed to disclose any of those types of things, I think that'd be really interesting as well. So
I'd enjoy it.
Yeah. Excellent. Well, until next time then. Thanks for
Until
being on the
next
show.
time.
Take care.